Welcome to our presentation on personal finance management. Whether you're just starting your financial journey or seeking new strategies to optimize your financial health, this session is designed to bring you practical and effective advice. I'm excited to walk you through proven techniques and smarter habits for managing money that can truly make a difference. Now, let's look at what we'll be covering today. Here's an overview of what our session includes. We'll begin with essential budgeting and saving tips, followed by smart investment strategies suitable for various goals and risk profiles. Then we'll dive into managing debt effectively, from everyday credit cards to student loans and mortgages. Finally, we'll wrap up with key takeaways, so you'll walk away with actionable steps to achieve financial stability and growth. Let's jump right into the first topic, building healthy budgeting and saving habits. A strong financial foundation starts with a well-constructed budget. Begin by tracking every source of income and listing all of your monthly expenses. It's helpful to break expenses into categories: fixed costs like rent and utilities, and variable ones such as groceries or entertainment. Understanding where your money goes is the first step to gaining control. Set clear financial goals, both for the short and long term. Perhaps saving for a vacation motivates you in the near term, while retirement planning is a longer-range target. One practical approach is the 50/30/20 rule. Dedicate half your income to necessities, 30% for discretionary spending, and the remaining 20% to savings and paying down debt. Another tip is to automate your savings. Creating automatic transfers from your checking account into your savings account means you consistently set money aside, making savings a habit instead of a chore. And be sure to build an emergency fund. Aim for 3 to 6 months of living expenses tucked away, easily accessible in case life throws a curveball. Up next, let's talk about further ways to cut unnecessary costs and leverage digital tools to get ahead. Reducing expenses is all about making mindful choices. Start by reviewing your subscriptions and memberships. Cancel those you don't use. For many, eating out frequently can be a major drain, so cooking at home not only saves cash but can be healthier too. Make the most of your shopping by seeking out coupons, buying in bulk, and pouncing on sales whenever possible. These small actions can add up to significant savings over time. Financial tools can help you track progress and stick to your plan. Apps like Mint, Inab, and Personal Capital offer ways to monitor your spending and manage finances on the go. Alternatively, even a simple spreadsheet can serve as a personalized dashboard for your income, outgo, and savings targets. With strong budgeting and savings routines, you're equipped to make the most of what you have. Next, we'll explore how to grow your money through smart investing. Investing is about putting your money to work so it can grow over time. There are many options, each with unique characteristics and risk levels. Stocks let you become a partial owner of a company, often providing high returns, but also carrying higher risks. Bonds are loans made to governments or companies, and they typically offer lower, more stable returns. Mutual funds pool money from many investors to buy a diversified mix of stocks and bonds, reducing the risk of any single investment. ETFs, exchange-traded funds, work similarly to mutual funds but are traded like stocks for greater flexibility. Don't overlook real estate, which can generate rental income or appreciate in value. Lastly, retirement accounts such as 401(k), and IRAs offer tax advantages and help you plan for the future. Investments can be confusing, but understanding your options is the key to making choices that fit your goals. Let's continue by discussing strategies to manage risk and focus on long-term growth. Managing risk is critical to successful investing. Start by diversifying. Spread your investments across different asset classes to minimize exposure to any single market fluctuation. Adjust the allocation of your investments regularly based on your tolerance for risk and your goals, shifting between stocks, bonds, and real estate as needed. It's helpful to periodically review and rebalance your portfolio. This keeps your mix aligned with your original strategy despite market changes. Keep a long-term outlook. The power of compounding lets your money grow faster the earlier you invest. So sticking with your plan and avoiding knee-jerk reactions to market news pays off. Staying informed about market trends can help, but avoid impulsive decisions. Finally, don't hesitate to seek expert help. Financial advisors can tailor strategies to your unique situation, guiding you with personalized advice and planning. Now, let's turn to the crucial topic of managing debt, another pillar of strong personal finance. Understanding your debt is the first step to controlling it. Make a complete list of all your debts, noting the interest rates, minimum payments, and outstanding balances. Prioritize paying off high-interest debts first, like credit cards. This reduces the overall amount you pay in interest. When it comes to repayment, two popular methods stand out. The debt snowball method means tackling your smallest debts first, which builds momentum and confidence as you eliminate balances. The debt avalanche method, on the other hand, focuses on debts with the highest interest rates, saving you money over time. If juggling multiple debts is overwhelming, consolidating them can help. For example, transferring credit card balances to a card with a lower interest rate, or taking out a consolidation loan to combine them all into a single payment streamlines your repayment and often lowers your interest costs. Let's continue by considering specific strategies for student loans, mortgages, and preventing new debt. Student loans and mortgages require tailored management. For student loans, look into income-driven repayment plans to adjust your payment amounts according to your earnings. Certain loan forgiveness programs, such as public service loan forgiveness, may be available if you meet specific criteria. If you own a home, mortgage management is vital. Refinancing to a lower interest rate can cut your monthly payments, while making additional payments towards the principal helps pay off the loan faster. Above all, avoid accumulating new debts. Use credit wisely only for essentials and always pay off the balance in full each month. A robust emergency fund can also keep you from relying on credit when unexpected expenses arise. You've made it through cutting-edge insights in budgeting, investing, and debt management. Let's wrap up with a concise summary. By following the guidelines we've explored today, you can confidently take control of your finances. Solid budgeting helps you understand and direct your money. Wise investing enables growth and security for the future, and effective debt management stops interest from eating away at your hard-earned wealth. Personal finance management isn't one-size-fits-all, but these principles can be the foundation for anyone's financial success. Thank you for joining, and here's to your journey towards stability and prosperity.